Welcome to Talk Tickers, where we break down the earnings calls that matter. Today, we're analyzing Universal Logistics Holdings Q2 2025 results.
All right, so here's the puzzle, right? Universal Logistics, they missed on revenue, they missed on earnings. But then you look at the stock and it just took off. So what gives? We're going to dig in and figure out what the market was seeing that the headlines completely overlooked.
Okay, first things first, let's put some numbers to this paradox. On the surface, this looks like a clear-cut disappointment when you stack it up against what Wall Street was expecting. So, as you can see, GAAP EPS came in at 32 cents. The street was looking for 34, so that's a miss of almost 6%. And revenue, $393.8 million. Also, just a hair short of expectations. So, yeah, by any standard measure, that's a miss. But then, this happened. The stock jumps almost 10% after hours. It's wild. And that tells you everything you need to know. Investors weren't just trading the headline numbers, they were buying into a bigger story. So to really get what that story is, we've got to pop the hood and see what's going on with Universal's different business segments. Okay, so right off the bat, you can see that contract logistics is the big one here. It's the foundation, making up a whopping 2/3 of the business. That's what gives them their stability. But let's break down how each of these pieces actually performed.
All right, now this is where it gets really interesting. Look at the contrast here. Trucking revenue, it fell off a cliff, down almost 30%. But, and this is key, their margin actually got better. And then you have Intermodal. Yeah, it's still losing money, but look at the trend. They're narrowing those losses, which is a huge sign of progress on that turnaround they've been talking about. And all of this really brings us to the core of the story, the part that investors got so excited about: management's game plan for weathering this storm.
Yeah, CEO Tim Phillips basically said, we're not just sitting around waiting for a better market. They are actively getting their hands dirty and changing the shape of the business for the long haul.
And their whole playbook, it really boils down to three simple things. First, integrate and stabilize what's working. Second, optimize and turn around what's not. And third, find those niche areas where they can specialize and really grow.
And you can see them putting that playbook into action right here. They're getting that Parsec acquisition integrated, which is adding a nice, stable $55 million to contract logistics. They're hacking away at the intermodal losses, cutting them almost in half from Q1. Their goal is to get that profitable by the end of the year. And in trucking, instead of fighting it out in the soft van market, they're pivoting to high-margin specialized stuff. Think wind turbine components. Plus, they're investing in a new CRM to handle a billion-dollar sales pipeline. They are not messing around.
Now, obviously, none of this is happening in a vacuum, right? Universal has to deal with the real world. So let's talk about the macro environment, the stuff helping them and the stuff working against them. So on the one hand, you've got some serious headwinds. The freight market is still super soft, you've got tariffs messing with imports, and car production is a little bit down. But on the other side, you've got some major tailwinds. They're getting costs under control, there's pent-up demand from retailers, and the big one, this long-term demand from wind energy projects. And management was really excited about this. They kept talking about this one big, beautiful bill. What it does is create this super clear 5-year runway of incentives for wind energy. It gives them predictability all the way through 2030. They literally said they expect 2027 through 2029 to be pretty fruitful years. That's a huge catalyst for their specialized trucking business.
So what does this all mean for the next quarter? For the rest of the year? Let's get into our take. Well, if you look at management's own guidance, they're basically signaling steady as she goes. They're not promising the moon. They're looking at revenues that are pretty much flat to maybe slightly up, with margins staying right in that same pocket. So no big surprises expected in the short term. So you can really look at this two ways. The bull case is pretty straightforward. Hey, the strategy is working. The pivot to specialized freight is smart, the intermodal turnaround is happening, and that wind energy business provides a multi-year tailwind. They're being disciplined. The bear case, well, it's all about the macro. If the freight market stays in the dumps, that's a problem. Intermodal is still losing cash, their debt is a little high, and hey, there's always a risk they just can't execute on this grand plan. Okay, so here's where we land. We're calling this a market perform. For next quarter, we're expecting them to hit their numbers, pretty much right in line with guidance. Because of that, we think the stock is probably going to trade sideways for a bit. The real catalyst is getting the intermodal business to be consistently profitable. Until we see that, it's kind of hard to see the stock making another big leg up.
Now, for those of you with a longer time horizon, there's an interesting trade idea here. You could go long ULH to play that specialized wind energy story and pair it with a short on a flatbed carrier that's much more tied to the general economic cycle and doesn't have that unique catalyst.
So at the end of the day, the big question is this. Can this pivot to specialized freight really insulate them from the ups and downs of the broader market? Is this a true structural change or just a temporary fix? That's what we'll be watching very, very closely. And as always, this is not financial advice.